Good morning, welcome to IG's early morning call. It's Thursday, 2nd of March. Let's take a look at the headlines as we wait what looks like a slightly weaker start on the European equity markets on this Thursday's session. We're focusing on what's happening on the foreign exchange markets. The dollar's been squeezed a little bit. We've got some inflation data out in the eurozone a little bit later on. There's evidence this week to suggest that inflation is beginning to pick up again on this side of the Atlantic, and that's giving the dollar a little bit of weakness. Meanwhile, in amongst some of the companies reporting earnings today, we're following what's going on at ITV. It's confirmed its guidance. It says there are some short-term challenges, but it's been focusing very much on the ITV hub replacement, ITVX, which it says is doing brisk business. And late yesterday, shares in Tesla falling almost 7%. There was an investor day yesterday, and the upshot of that is that investors and traders believe that it looks like Tesla is entering a period where we're seeing softer margins because of its drive, if you forgive the pun, towards cheaper vehicles on the road, which is itself giving rise to expectations of somewhat smaller profits. Let's take a look at what's happening in volatility. It's up today, and this reflecting this move away from these indices. And you'll see as we look across what's happening at the moment is that we now have losses expected across the board. We saw gains yesterday here in the London markets. In fact, the London FTSE 100 and the Dow Jones Industrial Average, I think, were the two major benchmarks. So we saw gains yesterday, as we'll see in just a minute what happened yesterday on the US markets. But broadly speaking, it's been weaker. This line of 78.76 continues to be an area of support, despite the fact on Tuesday this week we saw a candle close below there. Yesterday's performance for me was a surprise in terms of the relative strength that we got, but it was only a smaller move up than we saw on the way down the previous day. So I think that this is now beginning to look like it could well develop into something a little bit more serious than it is at the moment. And if at 78.98 you are short on this, your stop goes around about the 79.50 level if you're short on this market going into the start of today's session. And I think the same can be said for the German DAX. You can see we're not too far away from the recent lows on this market at 15,251. So you get the idea that we've got these markets now on the way down. As I said, we've got some eurozone inflation data out a little bit later on today. And if that gives anything like some of what we're expecting, an uptick potentially, or certainly holding on to some of the recent performance that we've seen across some of the European markets in terms of inflation, it means that the European Central Bank is likely to keep its foot on the pedal, which means that more interest rate rises are likely to come. Now, this French market, as I'm just talking, I'm seeing it strike new lower lows for the day. And in fact, if we close at these levels, it will be the lowest close that we've seen since the middle of February. 72.03 is where we are in the French market. So 7,200 holding at the moment, but only just as we speak. Certainly looking as though it could well be a weaker start to the trading day ahead when things get underway at the top of the hour. Overnight in the Asia Pacific markets, as we'll see here, it's been a day of weakness, broadly speaking. That gain on the ASX 200 as at the close today was only just a marginal rise in what was otherwise a day where we've seen trade on both sides of flat. And so that's the standout performance on the upside that we've got. But broadly speaking, this mirrors what we saw yesterday on Wall Street. If we take a look at what happened yesterday on the US markets, you saw the Dow up, but only by one of the slimmest of margins, not quite the slimmest, but very close to. S&P 500, NASDAQ composite on the way down. You can see, I think it's really tech stocks that really were hit in yesterday's session, as we'll see in just a few moments' time with that drop in Tesla shares. Yesterday, we saw declines pretty much across the board for all the major tech players, Amazon, Netflix, Apple. I think it was really a day when we saw money coming out of techs. NASDAQ only down 0.2%. But if you look at the longer term picture, you can see that as we strike lower, significantly yesterday on the 24-hour markets, we closed below the 200-day moving average. And you can see here now we have an entire candle below that 200-day simple moving average line, the red line there, and we're currently trading 11,831. So again, a bit like the European markets, I think we're trading short on this. How far down we go remains to be seen. But you can see this move up that we've seen from the lows we had back on the 12th of October. I remember I was talking about this bull market that had developed. But since then, we've seen this pullback. So I think beginning to get a little bit of a pickup now on the downside, which will enable those of us that are able to go short can go short. And you can do that, of course, across the IG platform. Just want to show you what's going on as well on the S&P 500. Now, this is a broader market index, but it does have a lot of text in it now, which I think is why we also saw that pick up on the downside yesterday. And also, like the NASDAQ, we're now down below the 200-day moving average there as well. Just want to complete the picture and take a look at what's happening with the Dow. 200-day moving average below where we are at the moment, and we haven't seen any print below that now since November last year. So we've been above the 200-day moving average. You can see we saw a test of that back on the 20th of December last year. But since then, we've seen these climbs, these rises on the Dow. But this move lower, again, I think gives us reason to believe there is further potential for some downside. The Dow does have some stocks in it which is holding things up at the moment. Some of these mineral stocks, I think, are performing better than others. And as we'll see in just a minute, we've got this idea that it's not just Europe where we've got an uptick in inflation, but we've also got an uptick in performance in China, which I think is pushing the dollar down a little bit. The dollar trading lower against major currencies this morning. I want to show you what's going on with the dollar basket first of all. It is a green candle today, but we saw a relatively strong downside candle yesterday. Lowest intraday trade we had yesterday for the dollar basket, down at levels not seen since the 22nd of February. The way to trade this, of course, is what's happening with the euro dollar. That euro rising yesterday by some fair strong margin. A little bit of an unwind about that today. But all this comes in the wake of strong Chinese data and stronger than expected inflation across some of those eurozone economies. Greenback still remains on an upward trend, though. I think in the longer term picture, this is all just a retracement. Recent data in the US shows that inflation is not slowing as fast as expected, and the job market remains hot, as we've seen recently. Now, it's the first Friday of the month this week, but we don't get the non-farm payroll data on Friday this week, tomorrow. We get it next week. Because of the Humphrey Hawkins testimony, or the 2 days of testimony that the central bank governor, Jerome Powell, will be giving to the House and the Senate next week. Will the Fed be more restrictive when it meets next to decide on interest rates, or show patience and maintain its tight monetary policy for a longer period of time? Now, two Fed members were out on the speeches yesterday, expressing their views. Minneapolis Fed President Neil Kashkari said he was inclined to continue to raise further beyond the 5.4% level that he previously thought would be adequate to continue to keep the downside on inflation. And Raphael Bostic was also out on the stump yesterday, recommending patience. In an essay released yesterday, the Atlanta Fed president says he still feels a federal funds rate is set to range between 5 and 5.25%. He said that would be adequate, but it would need to be kept at that level until well into 2024. Note that Neil Kashkari is a voting member, whereas Raphael Bostic is not, and neither Mester or Buller, and they were out last week saying that they believed that the Fed should have gone 50 basis points last time, and 50 basis points is expected by Buller next time, despite the fact he's a non-voting member. So you can see that there are some big names and some big voices still expressing concern that the inflation has not been beaten, and that inflation, the interest rate, should still continue to rise at a fair pace. Let's take a look at what's been happening overnight in the Japanese economy. Consumer confidence marginally rising to 31.1 in February from 31 the previous month. Economists had expected on average the index to rise to 32, just as a nod towards what's happening on the dollar-yen trade. Significantly, we've risen now to levels there not seen since the 20th of December. So we're at the high for the dollar against that now weaker Japanese yen at 136.84. If you're long on this, stock goes down here to around about the 135 level. 136.84 is where we're trading there at the morning. Later on this morning, eurozone consumer prices expected to rise to 8.2% in February year on year, after 8.6% in the previous month. Now, I say rise, that is obviously a slowdown, but this is still nonetheless inflationary. That figure could be stronger than thought. That's certainly the risk, according to some, after the latest inflation data in France, Germany and Spain that came in higher than forecast. Also at 10 o'clock this morning, the unemployment rate is expected to remain at 6.6% in January for the eurozone. In the US, initial jobless claims at 1:30 p.m. Economists expecting 195,000 new claimants last week. Now, let's take a look at what's happening across corporate UK. And I want to begin first of all with what's going on with ITV. We were looking at this as one of the more interesting stories to come out of the news headlines this morning. But in fact, this, I think, has been beaten into the shadows a little bit by some of the other numbers, which we'll cover in just a minute. I want to show you what's going on first of all. Total external revenue at ITV. up 8% at $3.75 billion. Total ITV studio revenue up 19% at just over $2 billion, with growth across the business, according to the statement this morning. It confirms its guidance, though. The company says, even though the short-term outlook remains challenging, the board has proposed a final dividend of 3.3 pence. That was 3.3 last year. Now, this gives an ordinary dividend for the full year of 5 pence a share. This time last year, that was 3.3 pence. You can see they've rewarded shareholders for hanging in there. Let's take a look at the share price chart. I've drawn this line here at 96.8, which was the highest that we saw on the shooting star candle back on the 9th of February. Since then, we've been sidelined. But in fact, we've got this rising line of support. Now, if you are long going into the session today, your stop would go under the underside of this. We've got 1, 2, 3, 4, 5 touches on this. So I'm quite happy to go long on this with the news out this morning. The stop would go tight underneath here at around about the 85 pence level. So just in case there is a pullback, you will want to be seeing that market continue to, you'd be stopped out if you saw a snapback. But I think ultimately, if this line continues to hold, you should in theory be in the money today. There was a massive drop in its share price last year, as we've seen, followed by an almost continued slide to support level at the end of September. ITV has been recovering recently. ITV reported a boom in viewership lifted by the Football World Cup and the launch of its new streaming platform, ITVX, which takes over from the ITV Hub. As a user, I'm not completely convinced I understand why they've done this. And there's some questions I know in the press about the headline title of this ITVX, but nonetheless, that's what ITV wanted to do. And it says it has benefited from this move and the way in which they're structuring streaming and live programming across the ITVX app, which I know that people have been moving into. Let's stay on the charts. I wanted to update you as well on what's happening at Taylor Wimpey. Yesterday was a down day for Taylor Wimpey. The British house builder flagging weaker sales and lower order book this year, reflecting a slowdown in the housing sector amid concerns about the broader economy. The order book, a key industry measure that gauges future sales performance, stood at 2.15 billion, down from 2.9 billion this time last year. I don't like the overall sound of this report, and I'm wondering whether perhaps maybe we're going to get a breach of this line of rising support. It only kicks in at, 116 pence. We closed yesterday at 117.9. So if we do get a build-up on the downside, I think we'll see a candle print below there. And if you are short on this, stock goes up here to around about the 124, 125 pence level. Staying again on the charts, I wanted to update you on one of the other areas of the market, which really liking actually. Haleon was the spin-out of the consumer health business from GlaxoSmithKline a while back. In fact, this chart here takes us into every single day's trade that we've seen since it spun out last July. And you can see recently we have hit a new all-time record high. Since that 21st of February high print at 338 pence, we've seen some weakness in the stock. But I quite like the look of what we've got this morning from Haleon. Full year revenue up 13%, organic growth up 9%, operating profit increasing 11.4%. Of course, these are all pro forma numbers because there was no comparison this time last year. Adjusted operating profit up 13.8%. Profit margins flat on the year at 22.8%. That means that it's treading water in terms of its overall marginal profitability. But nonetheless, it is attracting business, and we are seeing an increase in overall bottom line numbers coming through. Opening at 326.3, if you're long on this, stock goes under the underside of this rising line of support at around about the 318 pence level. So things looking good there. Staying on the charts, CRH. Now, CRH is an interesting company. This is one of these businesses that repurposes a lot of what we're seeing in terms of the building industry. It supplies ballast to the building industry, and it breaks up old ballast that's given to it with buildings taken down to replace others. And you can see, actually, this is a long-term chart here. This peak we saw on the left-hand side here back in July 2007, then came the great financial crisis. Since then, we've seen this spike up. That low down there was the COVID low. And you can see that that was at, 1501. Here we are now at 51. That record high we saw back in January 2022. We tried to attack that, but didn't quite breach it just a week or so ago. And I'm wondering whether today, as a result of what we've seen from CRH, good numbers out this morning, full year dividend up 5%, significantly increasing a share buyback program to $3 billion over the next 12 months. We've got 1.2 billion already in the bag. So that is a really good result, I think, and CRH making the most of what they got in terms of opportunity. 39.51 is where this stock will open. It'll be interesting to see where that stock ends the session today. Staying on the charts again, I just wanted to wind the clock back to take a look at what happened all sessions last night on Tesla. And it was very close to this line of support that I've got on here. In fact, I've drawn a line absolutely indicating where we were at the low point yesterday at 189.20. The stock will open this morning at 9 o'clock a.m. UK time at $191.37. This stock was down yesterday because the EV car company has flagged a paradigm shift in the way that cars are built, saying that manufacturing improvements can lead to a 50% reduction in production costs and pave the way for a new generation of electric vehicles, including the long-term, hinted at, low-cost Tesla. This would squeeze margins at the company. And I think it's one of the reasons why we saw this stock down in the session in yesterday's trade. It was a 4-hour presentation yesterday, a whopping great big bite at what's happening with the company. It began with a look at how the global economy can switch to electric from combustion engines and save money and resources. And Tesla outlining how it plans to scale massively its electric vehicle and stationary battery storage production to accelerate the world's transition to a carbon neutral position by 2050. It seems investors and traders believe that it will come at a cost to margins. But I think that's why we saw this stock end down yesterday, as we saw it down at 191.37. So that was all sessions on the IG platform last night. Just wanted to flag one company worth watching this morning before the market opens. That's Best Buy. It does trade all sessions on the IG platform. It is expected to post fourth quarter earnings before the US market opens. Analysts anticipating earnings per share of $2.10 on revenues of 14.7 billion. Also expected today, Broadcom. This is a semiconductor manufacturer. It's expected to post earnings per share of 10.18 on revenues of 8.9 billion. And Costco Wholesale, earnings per share $3.21 on revenues of 55.55 billion, according to the latest survey from Refinitiv. Now, let's go back and take a look at what's happening on the commodity markets. Just wanted to flag what happened yesterday in terms of crude oil inventories, just to give us an idea of what's going on there. Rising for a 10th week in a row to their highest level since May 2021. Crude oil inventories rising by a margin of 1.2 million barrels. Now, this reflects what we heard earlier in the week from the American Petroleum Institute. But look at what's been happening with the price of oil. It's been rising since the lows that we had on Thursday last week. This is because expectations are that once again, we're seeing an improvement in some of the numbers coming out from China, and many are hoping that this could well end up in an improvement in demand. That being said, we've got this band here at 72.65 to 82.65 for US crude, which is what this is. We're currently trading at 77.33. Not much of a bite for us traders on a day-to-day basis there at the moment. Spot gold, 3 days in a row of gains. Today we've got a little bit of a pullback. I wanted to end on what is, I don't think I've ever covered this before. This is London cocoa. Now there's New York cocoa as well to think about. This is a better than 6-year high for the London cocoa market. On supplies that are shrinking, according to the International Cocoa Organization, forecasting a deficit this season. That's the long-term chart. You can see that yesterday, this isn't open yet today, today it will open at 21.66, which is a high not seen since that date there back in October 2016, which is where we're opening on the London cocoa markets. That's it. Join us at 10:30 with Charting the Markets. Do watch out though for Halion at the start of today's trade. I think that could well be the flag bearer for the bulls in the market this morning. Also watch out for the response to earnings out today from Taylor Wimpey and ITV. We're back at 10:30 with Charting.